Could Bitcoin see another flash correction below 60,000, and if so, how can you prepare? In today's video, we are diving deep into the short term and the macro charts. Let's jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope everyone's having a fantastic day today. In today's video, we are doing a detailed macro and short-term analysis, clearing the fog, clearing the uncertainty, clearing the doubt in regards to what is happening with the price action and the strength of the macro trend. We are going in detail in regards to exactly where the price action is likely to go next, the key levels you need to be paying attention to, and exactly how to capitalize on the next move in Bitcoin's price action. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us over on Telegram. It is the third link down below. You'll get access to updates, charts, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us over on VIP. We post trading setups with the exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our general chat, our trading chart and education chat, daily video, news, help, and trade setup chat with over 600 members. Contact us in the pinned comment of the free channel or click these links for more information. Let's go ahead and dive in. So we can see in the last 24 hours, we have seen a decent amount of volatility upwards and downwards for Bitcoin, as we have recent news that Hong Kong approved Bitcoin spot and Ethereum applications, which sent the market on a short-term rally toward the upside, retesting the middle point, the midline, which is this dashed midline between the range of the $73,000 to $60,000 horizontal consolidation range, the range we have been within for nearly around 7 weeks. And again, it is the key structural range on Bitcoin's price action, which will determine whether or not Bitcoin is going to see a macro continuation upwards in the coming months, or potentially an extended bloody correction. So we'll be discussing in today's video exactly what that means and what to look out for in the video today. So let's start on that market data. How are we looking? 24-hour volume up to around 212 billion. This is down 6.29% over the last 24 hours. 24-hour liquidations at 274 million, up 1.76% in the last 24 hours. Of the 274 million in liquidations, a whopping 200 million have come from long positions, as Bitcoin did rally on the ETF news towards that midline, regaining around 10% from the 60k lows. But in the short term, we have now seen over the last couple of hours a retracement back down to around 63,000, which wiped off those 200 million in position. So a pretty large move going into the start of this week. Now, we do have to be very much aware that with this week, we have the major event, which is going to be the halving event, and we're discussing that in today's video. But like we said at the start of the month, guys, anytime we have these major, widely anticipated events, we generally see much more emotion within the market. And when we see much more emotion, we generally tend to see more volatility, like we have seen in the last few days. So moving over to the broader markets, the DXY is continuing upwards, breaking through that 106 neckline of resistance again. We are now expecting a continuation upwards to this 107 mark, looking relatively bullish here for the DXY. If we do break back below this level, that will mark this as deviation, and then we are expecting a correction lower. So at the moment, bullish, provided it remains above this 106 level. If we do break back below, we are expecting a retracement back down to 105. If we do not break back below, we are expecting continuations to 107. Moving over to the S&P 500, we have seen a correction back to retest our first major support at 5,100. Again, like we have said, any correction develops within this range that remains above 5,000 could be considered a healthy correction. We do not expect to see a drop below 5,000, but if we do see a drop below 5,000, that could result in an extended correction to retest that 50 EMA as well as the 2021 high. Until then, any correction that results in a move downward that remains above 5,000 should be considered a healthy higher time frame correction. The Dow Jones not looking as strong as the S&P, retesting its now major area of support at 38 to 37.7. Again, a loss of 37.7 is going to be the trigger for an extended correction down to fill that VRPV gap, retest the 50 EMA and the prior 2021 high. We can see on the volume profile that this area of support we are retesting is an area of massive significance, and again we are expecting bullish reversals to develop from this point provided we hold above 37,700. Enough about that, guys. Let's go ahead and discuss what we are going over today. So like we said, we are going to be discussing in detail this high time frame range, the significance of it, and breaking down the short-term price action, potential continuations downwards, what the buyers need to do to push the price back upwards, and what this high time frame range has impact over in regards to the macro trend. We'll also be discussing our weekly chart in regards to the current candle closes, the momentum, and going over the macro charts in terms of our technicals and our 4-year cycle. Is the macro trend still strong? Are we still looking bullish on a macro, or is all of that coming to an end? So before we get into it, a quick word from Bitget and BingX and we'll dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay, MegaWhale team, let's go ahead and jump into Bitcoin. So starting on the short-term price action, and as we've said, we have the halving event coming up in just a few days, so emotions are high, coupled with the recent conflict in Israel and Iran. Emotions are even higher, coupled with the fact that we are now been moving sideways for many weeks after an explosive move upwards. A lot of speculation is now popping up, a lot of uncertainty is popping up as we are starting to see volatility on the higher time frame decrease, resulting in momentum falling, resulting in people's overall feeling about the market coming to become more bearish. And this is totally normal when we do see these high time frame sideways continuations, okay? And this is a sideways consolidation after a large rally. It is expected to see average momentum fall. We've seen momentum fall as a consequence of this consolidation, and we can see represented by our RSI that momentum has been in a daily downtrend ever since we broke into this $60,000 region. And that doesn't necessarily mean it's a bad thing, right? When we do see momentum, when we look at momentum or RSI or any momentum indicator, all it is a reflection of the momentum over a particular period of time, and it is calculated based on the average momentum from historical data points. So we see large volatility and momentum is rising aggressively, and then we see price action consolidate sideways. It is normal to see momentum fall. That is not going to be a direct representation of weakness. It is a representation of exhaustion in the prior trend moving into a consolidation, but it is not always necessarily bearish. For the trend to flip bearish, we need to break below key volume levels, key areas of structural significance. When I look at the price action, I like to imagine the price action to be more than just numbers. I like to think about buyers and sellers actively clicking the buttons, stepping in. If we think about what moves the price action up, it's people click buy. What moves the price action down is people clicking sell. So when we're looking at these key levels of major support that have held for multiple weeks, the narrative of which that is holding this price action above the support will need to shift to a more bearish narrative to result in the people actually ending up clicking those sell buttons to push the price lower and lower below that support. So Yes, support is a tangible thing. Yes, we can see it on the chart. Yes, it's on the order books. Yes, we can use our data to represent it. But at the end of the day, it is up to the buyers and sellers, the people who click the buttons, to maintain those levels. So unless we're seeing narrative shifts to become more and more bearish, it is unrealistic to assume that these high time frame levels of support, which have been multiple retests or retested with bullish narratives moving forward, will break down randomly. There needs to be a cause for that breakdown. Nothing is sporadic. Nothing is random. Everything is cause and effect. And the potential risks of that are, of course, the Bitcoin halving being a sell and news event, the developing conflict in Iran and Israel escalating. All these things could shift the overall market narrative to a more bearish perspective, which would result in these supports breaking toward the downside. But the key thing to remember is until that happens, support is support until it is not. And all we are seeing, if we look at this range logically, is a horizontal consolidation. If we ignore the macro for a minute, all we are seeing is a horizontal consolidation. As we would see on a smaller time frame, it is now just on a larger time frame, and these trigger points, the 60k region and this 73k region, have macro impact in regards to the macro continuation of where the price action goes. So it has more significance, and if it has more significance, people are more emotionally attached to these levels and invested in what happens. Emotions become higher and the price action becomes more volatile. So let's talk about the key levels. Again, macro continuation above 74. If we break above this 74 region, that is going to be confirmation for a macro continuation upwards. This range would be over and the price action will break through, continuing 80, 85, 90,000. If we do break below this range, we are looking at our historical data. We are looking at our VRPV range to indicate where potential support could be. We can see we do have a massive gap in the VRPV between that 61 region, okay, and this $52,000 region, our POC level. So the $52,000 region is going to be the lowest logical target for Bitcoin if we were to break below our sell side liquidity at 59,000. Now that doesn't necessarily mean 52,000 would be reached if we break down. It is just the lowest logical target if we were to see an extended correction downwards from 60,000. Ideally, we would see support found at around this $58,000 to $56,000 region, as we can see an area of historical buying or consolidation around that region. So if we were to see a breakdown which resulted in confirmation below the sell side liquidity, we could see a correction back down to this 56 to 58 before we then continue on back upwards. On the short term, there is going to be a risk of deviation. As we said already, when we see deviation on one side of the channel, we generally do see equal and opposite reactions on the other side of the channel. So we have seen deviation toward the top side, deviation simply being an unsustained breakout of the range high, and we could see deviation toward the bottom side, which would simply mean an unsustained breakdown of the range low, which is the $60,000 region. So we could see a liquidity grab underneath 59,000 into that deviation range before continuing upwards. And this scenario is quite a likely scenario while Bitcoin remains underneath the current short-term downtrend. So on the short term, guys, again, while Bitcoin remains underneath that downtrend represented by this black diagonal trend line, a correction into this range low deviation is going to be very, very likely. Now, even if we see that correction into the range low, this area is going to be assumed to be support until proven otherwise. So we would expect any deviation that occurs within this range to result in a continuation back upwards, unless we start to see, a 4-hour candle close underneath this sell side liquidity. That would indicate some significant weakness has been sustained underneath that high time frame area of support at 60,000. Those are the two key levels you should be paying attention to, and those are the impacts you should be aware of. Moving down to up to a daily chart, if we do want to see the price continue upwards here, we do need to see a break of that downtrend on the RSI. Again, a break of that daily RSI downtrend would indicate we have flipped momentum positive, and we are very likely to break through that range upwards. We can see on the daily chart we are breaking underneath that 50 MA, showing considerable weakness over here, as again the volatility is flipping. This is an expression of volatility. Our moving averages are not levels of support. They are measurements or representations of volatility. When we move further away from the 50 MA, it signifies increased volatility. As we compress, we can see compression, we can see compression, we can see compression. It is representative of decreasing bullish volatility, and eventually we break under and we enter this bearish territory. So Bitcoin is now entering into a downtrend on the short term. However, for the downtrend to continue much lower, we need to break underneath these key areas of support as buyers are sitting in these ranges. So the buying pressure in this range, okay, is less significant than the selling pressure pushing us into this range. The support will not hold and the price action will continue down. And that is why it's very important to assess what is happening on the short term to get an understanding of how that is developing moving into these ranges of support. So moving down now into the immediate time frame before we get on to, what we're going to be speaking about next with the macro, we can see again Bitcoin did break out of this short-term downtrend. We saw a rally up to our midline. It was unsustained. At the moment, we have seen quite a fair bit of chop. And again, this price action is not moving in any identifiable structural pattern. It is not moving in any identifiable structural pattern. So it is very hard to actually look at this and say exactly what is going to happen on the short term. And in these scenarios, we have to break it down and look at our horizontal levels. So again, we are looking at our prior lows, our prior liquidity points on the chart. This point right over here, a very key level, 62,500. This is going to be a short-term area of support. As we can see, we are finding support. The price action is compressing against our 50 EMA and the momentum is moving back upwards, indicating buyers are starting to step in over here and they're attempting to push the price action back upwards. Again, regardless if they push the price action back upwards to here or even here, none of it really means anything until we break out of that downtrend. This is very important. All of this price action, whether it be up and down, up, is all just chop. If the price action does not break above or below key structural areas of resistance or support, it is simply just normal fluctuations in price that have no significance to the directional continuations of the asset's movement. So at the moment, whether we go back up or stay back down, it is really equally the same. So I wouldn't get caught up in exactly what has happened in the short term. You have to zoom out your perspective to the higher time frame within these chop zones. Okay, moving over to the macro chart, guys, let's go ahead and discuss this chart over here. And with this chart, I actually want to bring up another post I talked about a few weeks ago. So give me a second just to go ahead and bring up this post in our Telegram channel. It is in regards to why Bitcoin being oversold on the RSI in terms of momentum is not necessarily a bad thing. So I'll talk about this in a second, but let's go ahead and take a look at the price action. As we can see, Bitcoin is retesting that prior all-time high. We are sitting just underneath that major area of resistance, and we can see the momentum is very, very oversold, or should I say overbought, sorry. Now, this isn't necessarily a bad thing, and I looked through this chart the other day, and we went through the macro for Bitcoin and blocked out every single moment that Bitcoin remained in that oversold territory in comparison to every moment Bitcoin made it into oversold territory, which the top was in. And if we look at this 977 days out of 1,012 days that Bitcoin remained oversold, overbought, I keep mixing up, overbought on the RSI, actually marked a continuation in the uptrend. It did not mark the top. So the vast amount of time Bitcoin on the macro chart has been overbought has actually resulted in extended uptrends for Bitcoin rather than marking the top for Bitcoin and extended corrections. In fact, only 35 days out of the 1,012 days that Bitcoin remained overbought on the RSI marked the top for Bitcoin, which then resulted in a correction into that bear market. So that gives it, when we look at percentage-wise, a 3.45% chance that any day when the RSI is above 80 would be the top. So it is actually quite unlikely, just looking at momentum over here and saying, well, the RSI is overbought, that this is going to be a top signal for Bitcoin. But again, just because the momentum is falling doesn't necessarily mean we see, again, bearish strength picking up and the price action breaking these key levels of support. Okay, so let's just go ahead and put that one off to the side. Let's move over to our macro charts, and the 4-year cycle is still very much intact. If we look at historical price action, we can see that every time we come up and retest, okay, that prior all-time high, So 2021, it was around $1,000. 2017 was around $20,000, and in this instance around a $69,000 mark. Every time we retest that prior all-time high, we always see a degree of volatility, and we always have historically seen corrections develop. Back in the 2017 correction, from that point, we saw two corrections. We saw a correction on the initial retest, okay, which took us down 33%, and then we saw a second correction upon the deviation above, similar to what we are seeing this time around, which took us down 32%. In both instances, okay, the midlines of the pi cycle indicator remained as support. Moving over to our second instance. In this instance, we saw rejection from that level, resulting in a 13% correction. And in this instance so far, we have seen a correction which has been around 16%. So corrections from our prior cycle highs have not been unprecedented, have not been seen before. It is actually what was expected. The most important thing, like we've been saying, is provided we remain above the $60,000 level, all of this price action is actually very, very normal. It is just simply consolidation. So it's important to understand the context of movement, not so much just zoom out and just go all, you know, worst case scenario every single time Bitcoin corrects a little bit. If you look at the higher time frame, look at all these corrections we have had for Bitcoin. And I'm not just saying this to downplay the correction we are seeing here, but if we're looking at traditional tops, if we're looking for traditional top signals for Bitcoin, we have not got any traditional top signals here for Bitcoin at this moment in time. The only reason people are assuming this could be a top is because of the location of which this correction is developing from that prior all-time high, and they are worried about seeing double tops, triple tops developing, so it is more speculative. But if we look at the data, there is not actual many top signals that we have seen historically that have marked prior tops pop up in this instance. In fact, there is not a single one I can think of that we use as leading data that is suggesting this is the top. Now, that doesn't necessarily mean the top can't be in. It is very, very unlikely based on the data we have right now. It is important to understand what drives macro price action is macro drivers: economic policy, monetary policy, taxation policy, global conflicts or environments, okay? Most importantly, interest rate data, the cost of debt, the strength of the dollar, all of these things influence the macro direction of asset prices. So until we see a shift in those narratives which are driving the price action of risk assets upwards, specifically the future costs of interest rates, of cost of debt, interest rates falling in future periods, until we see that narrative shift, it is unlikely we are going to see an actual top. Regardless, we are likely to see a short-term correction. This is very important to note. Even if we do see these corrections downwards, for this to invalidate the parabolic phase, we would need to break underneath the high short moving average and the low short moving average of the pi cycle indicator. I go a step further, we would need to break below 48,000. A loss of this level would result in a macro continuation back downwards for Bitcoin. Until that happens, it is very unlikely we see anything of a sort. I'm going to leave it there, guys. Thank you for watching. Hope you have a fantastic day, and we'll catch you guys in the next video. See you then.